Hi, everybody. I am Kirsten Bush, the Business Development Lead here at Cause Inspired. Thank you for joining us and for being a part of the Cause Inspired family. We are honored to partner with so many incredible organizations working to make the world a better place. And that's why we wanted to start something exclusive for you. So welcome to the Cause Inspired Client Education Series. This month, I am excited to introduce to you the financial advisor, Strum. Steven has over 15 years of experience in management and sales leadership and has been a financial advisor at Northwestern Mutual for 9 years. He has served as a leader in many community organizations, including First Coast Hispanic Chapter, Achieving the Dream, and the Juvenile Diabetes Reach Foundation. Today, Steven will be sharing his expertise on charitable giving options that you should know about for your donors. So take it away, Steven.
Maybe I should hit the mute button. Yeah, I got it. There's a little white dot. Yeah, there's a couple people that are on this call that are probably going to laugh at the fact that the only way I could shut up for any moment of time is to hit the little button. So it's great. Hi, everybody. Thanks so much for having me. So just first as a disclaimer, hi, I'm Steve Strum, financial advisor, Northwestern Mutual Wealth Management Company, all the fun stuff. And of course, as we go through this educational business, there is so much content that's out there. The goal for today is to maybe tell you a little bit about who I am, what my team does. I can never take credit for anything that I do by myself. Certain people that might be on this call would also appreciate the fact that if I can tie my shoes and forget to, remember to close the garage door, we're good. And completing a sentence is just a bonus. However, I am a financial advisor. I do have a great team of people that are all around the country, and our job is service to others. And one of the things that we're going to talk about today is about this charitable giving. What we're seeing out there in the marketplace, knowing that, in these very unique, interesting times, we have a unique opportunity to be able to approach potential donors. But at the same time, people are scared, just very, difficult situations for business owners, people that want to give, which also creates an imbalance for charities because people want to do stuff, they're afraid to do stuff, and they don't know how to do stuff. And then, of course, with some of the changes in the tax law, there's some things out there that are very interesting. And the goal of this is to give a high-level overview and maybe give you guys a couple of takeaways that you could take to your prospective boards. With that being said, as many things as we can talk about in the next 20 to 30 minutes, there are an infinite other amount of options available. So the big thing about it is as we start going, if there's something that you have a question about, something that doesn't make sense, or, hey, that's a great idea, how do I do that? The team over at Cause Inspired Media has my contact info, and I'll put it up here for anybody here at the end where you guys can take it down and give me a call. Before we get going, anybody on this call, as we kind of use this as somewhat of an interactive dialogue, is anybody out here specifically wanting to know something that is bothering them or a question? If you could put it in the chat box, if there's something that you have that is important that we make sure to cover before I start just kind of rambling on about just a general overview, that would be helpful. If not, perhaps at the end of this, it might create some questions. So as I'm letting that chat box load, I'm going to move you guys over here, not staring off into space, but I might in a little bit. Who is the host? Kirsten, is that you?
It is. I believe I just made you co-host.
Okay, great. So I can share my screen at the appropriate time? Excellent. Thank you very much. Okay. So as we get going in this conversation, one of the things that we're going to talk about is the concept of charitable planning. And not seeing any specific questions on the chat box, I'm just going to kind of go through the high-level overview. Please take some notes, and I have some documents that we can share that talk about things like donor advised funds, giving through a 401k, some of the changes in the tax law, so at least you'll have some of the basics that you can approach your board with, because things are changing within the world of financial planning as well as within charitable giving. So the one thing that we should really kind of focus in on is, what are the big takeaways? The biggest takeaway that you guys are going to have coming out of this is finding out what are your goals. I know we're getting close to budget time. As has been mentioned, I have served on more boards than I could name in 20 minutes. A little bit of a part of who I am when people ask me who I am, what I do. So financial advisor guy, yes. I also host a local TV show in Jacksonville, Florida, and we actually have a segment on it called Making a Difference. Actually, that's how I met the gentleman that's now not on the camera, Mr. Josh Lusk, the Kimosabi of Cause Inspired. He and I actually met through that as a way to give back to charitable. There he is. Everybody say hi to the man. That is, if anybody is the Wizard of Oz behind the curtain, he is the man. And then Kirsten, please tap your red shoes 3 times because there is no place like home. And so Josh and I actually collaborated on this. And what it was we gave organizations, charities, such like that, an opportunity and a light to be able to promote their organization where they may not have had a voice due to potential size constraints, which then has grown into what you guys have now had the ability to work with him and his team. I also serve as a speaker around the country for trade organizations. And the last one, which is kind of neat, is I am a part owner of a charitable organization that we do a lot of work with local charities and national charities to basically raise a bunch of money and give it to other people that are in need. So anytime that I talk, I always talk from this being a very important piece. In my mission, vision, values, we have these really long mission statements sometimes. My personal mission is, before I die, I want to serve 1 million people. And so I either need to live to about 850 years old, or I can't do it by myself. And this was a really unique opportunity. And thank you to Cause Inspired to allow me to talk about this, because there's some really fundamental things that we can discuss today that can give you guys something to talk about that's new, both to existing donors as well as to new donors to help your charities of choice. So what are the things that are important to talk about today? If we have 2 goals, the first goal would be to identify what are the goals, right? What do we want to get from this meeting? Well, we want to have ways to be able to approach people that might be new and different with some of the things that are out there available for charitable giving. The second thing is really to understand what are those options. Because when you talk about charitable giving, people are always thinking about, okay, great, I'm going to give a gift of cash on the, here's a check. Well, that's always great and it helps for budgets, but it doesn't always just have to be cash. So when we look at the outlook in the United States today, 90% of households that were considered to be of upper middle class or upper class gave to some kind of charity. That's a pretty big piece of the pie. So if we think about that, where is that piece of pie going? Who is it that they're donating to? And why can't they donate to you? So why do people give? So there's a wider range, right? Do people give out of 2 reasons, essentially, selflessness and selfishness. So selflessness is the betterment of, the society, to trying to meet a critical need. Something happens and, we have a hurricane that just hit. Red Cross is already on the way out there. And so people do that. Other things are people want to leave a legacy. And not that selfishness is bad, but people really want to say, hey, you know what? I'd really like to have my name or my family's name for the work we've done immortalized in the organization. And all those things are really good things. What we need to understand is, how do you appeal to the ones that are selfless, that don't want to necessarily have recognition, and who wants to help create a foundation for your organization? Some of the things that are important to understand when you do talk to your givers, most of you guys are probably aware that there is an income tax deduction. Now, to be clear, we have to make sure that when we do these types of plans, we always want to make sure to get independent counsel and CPAs and all those people to certify it. You definitely want to make sure to have check and balances in this department due to the heavy regulations of 501c3s. But you do have the ability to avoid defer capital gains if you're the giver, reduce your estate taxes, and then, of course, provide different options for the charity of your choice that allows you to both leave a legacy for your family, but then also allow you to give to the charity of choice. So what are the basics? The basics that we talk about, right? What kind of charity? What's the nature of the gift? And of course, what's your income? And so in a moment here, we'll talk about some of the stuff I have ready to share about some of the changes that are favorable in the new tax code. So when we talk about cash, right, there's deductions. So deductions are right at that 50 to 60%. You could also do ordinary income property, which you get a deduction for, and then long-term capital gain, which you get a little bit less deduction for through fair market value. When people talk about giving, what are the things that they can give? Well, everybody here, right? By show of hands or chats or of emojis, I guess, as we are in this day and age, everybody thinks about cash. I can give cash. Well, this is true. You can also do things like equities, stocks, bonds, mutual funds. You can give those. Real estate, collectibles, you can donate portion of insurance proceeds. This is actually a very unique way to create a foundation. We'll talk about how people are doing that with planned giving. You can donate retirement plans. You can donate cars and planes and boats and stuff like that and other real estate. So there's many more ways to be able to do it. Either way, what that's going to do is that's going to be favorable for an organization. Sometimes those deductions or sometimes those donations can be given now to be counted as today's dollars. Sometimes they can be counted towards a future endeavor for planning. Also, for the proposed giver, then you also get more favorable treatment when it comes to estate tax planning. So what are some of the different ways that people can do this? So there are direct gifts, which we are very familiar with. You can give a gift of an annuity. You can do a trust. One that's very important that a lot of people talk about is a charitable remainder trust. You can actually give proceeds of cash inside of a life insurance policy or a death benefit. Retirement plan assets, you can create a private foundation or do donor advised funds. For today, we could go on and on about the different, the different pieces that you can do. One of the things that we will talk about is just maybe a couple of ideas that you could take away. And as things get developed, I'm more than happy to answer any questions offline for anybody who might have a question about actually how to set this up. I did mention I work as a team around the country. And one of the really nice parts about working as a team is more, two heads are better than one. I just happen to be the humble representative of the organization, but we actually have some of the best planned giving and charitable planning team members in the industry, let alone just within the organization. So happy to answer any questions. And of course, if anybody has anything that's kind of out there in the weeds, I will definitely get you the answer. All right. So when we talk about planning, what are some of the pieces that are out there? So let's talk a little bit about some of the ones that you're here from. So one of the ones you're going to hear from is creating a trust. So this is a document done with an attorney. A trust is different than a will. A will is I die and Bob gets the money, and if Bob dies, I get the money. A trust is I die, Bob gets the money, and here are the rules. Well, if Bob is a charity, what we have is we set up a trust where the donor will contribute assets into the trust. When that trust does manifest upon the person's dying, that income is generated, and that income is generated goes to the donor, possibly, or to the charity. A charitable remainder trust does give enhanced flexibility to balance out the goals because it is going to be seen as very favorable. When we talk about a gift of life insurance, so if somebody has a life insurance policy, there's a very interesting takeaway here because a lot of people that are donors are starting to age. And as they're starting to age, one of the things that's a challenge is, that donor group might be going away. Now, we want to appeal to younger donors as well as our seasoned donors. And a way that we have found a lot of our clients that want to give have been doing if they have a significant opportunity of wealth in their estate plan is instead of giving cash directly, they're actually able to give a gift to an insurance, a charity, which then can either take an insurance policy out as still making sure it's a donation, as well as if they have existing stuff, how they can leverage those assets to the charity itself. Everybody knows the term, 401k. So what's a 401k? Subject 401 line K of the IRS tax code. There is about 10 different type of 401ks. If everybody here is old enough to remember the joke about a copy machine for years was called a Xerox. Well, a Xerox is a brand of a copier, not the copier itself. So everybody just kind of stamps this with 401k. However, there are about 10 different qualified retirement plan assets, and the income tax on there might actually save them up to 50% on what they would have done if they just died normally without giving. So we'll talk a little bit about that. We can do some different things with donor advised funds. People have probably heard that term. So basically the way that works is they can either put cash or security into an irrevocable contribution. They do get a deduction. Now, each deduction would be unique based off of their individual tax circumstance, so we would get their CPA involved. That contribution can grow every year. And then what will end up happening is that you can give grants to qualified charities wherever you wish. So donor advised fund can actually simplify that process and maximize the gain of the charitable gift itself. So that's something that you guys have probably heard about. One of the things that we want to talk about is, as we're going through this, I'm going to go ahead and share my screen, are some updates. Let's see here, 1 second, please. Okay, so you guys should be seeing my screen at this moment, right about now. And just as a quick system check, just make sure that I know what I'm doing, which is debatable at best. Kirsten, can you see me scribbling on the screen? Excellent. Okay,
Yes,
so now all right, I can share the screen. Presentation's over. We're good. Okay, so let's talk a little bit about, this is a bulletin that was put out. I'm not sure if you guys are aware of this, because this is something that we track very closely. There was a pretty significant tax code change. And I know it's coming under some pressure right now, and this is not necessarily a political dialogue. This is just one that is dialogue that is happening every year. The tax code has changed, it seems, based off what's going on. But one of the things that was changed that was pretty significant was the world of charitable giving. And so the impact on it, we are in what is now considered to be one of the lowest tax rates, historically speaking. Most people that I say that to that are under the age of 50, they're like, I can't believe you said that. We're paying 40% taxes. Folks that are over the age of 50 will remember in their working years that top end income tax in the early 80s could be as much as 70% or higher. But because we are in that environment until the law of the land is changed, it does give us a little bit more favorable standard deductions. So this is what was passed in 2018's tax plan, HR 1. And so the single head of household buried filing jointly, you can see that the deduction is being impacted significantly under the new tax law. The reason that that's important for you guys is, though, there's a little bit more capacity. If you're going to go just for a regular ask, then you have a little bit more that you can ask for. As we go down the line, so deductions for charitable contributions, they were limited to 50% of AGI. AGI is adjust grossed income. So, whatever you earned less than what you paid in taxes, your AGI is what you actually paid to the IRS. So there is a little bit more there. Taxpayers who itemize their deductions will be able to deduct a greater percentage of the gift. That's important. Increase to the exemptions. Now, this is a lot of chatter right here. So one of the things that has been a hot topic is what is called the estate tax. You might have heard it as called the death tax. This is going to be more imperative than ever for charitable organizations. Right now, we're sitting at about 11.5 per person. There is some talk that might be reduced to 5 million. So people are really going to be scrambling. One of the things that you can provide to them is, gosh, if you guys want to consider re-looking at your charitable planning, whether we use your 401k as an example, or whether you use something else, that can help impact to a substantial degree what your estate tax would be. Not necessarily something of motivation out of fear, but it is a reality. So it's something that we're facing in the financial markets daily. We have clients that are worried about what's going to happen if, then of course all these things happen. But one of the things that we always recommend to them is, what is a charity? What is something, do you want to give back? Do you want to make an impact? And then what we do is we put that inside of their financial plan and work on a strategy that's going to not just help their families, but then also help their charity. So this is a little bit about some of the tax law. As we get going through it, another piece of something that we want to talk about is estate planning. So this is a case study. I'm going to, in the interest of time, send this out. And this talks about how we do some of those things in detail. One of the items that you will hear about, and some of the folks in here may in fact be this, is a private foundation. So what is a private foundation? A private foundation is a non-tax exempt person that basically you have people that give money to a private foundation that then give to public charities. We talk a little bit about how the distribution goes, and it does give you a little bit more tax impact. Now, not to get too far into the weeds, because I can go on and on and on about the way that this is recognized to the point where it may put people to sleep. What the important piece is as you guys are looking for ways to create opportunities, most charitable organizations have a CPA. One of the nice parts about some of the documents that we put out for you, okay, is we will actually put the IRC code there so you can print this and go to your tax professional and say, hey, does this apply? So there's different things that we're going to talk about. So some of the stuff we're talking about is obviously distributions of charities, investment of foundation assets. That's a whole nother conversation. But there is some opportunity for foundations themselves to have an investment strategy to help grow. One of the things that's going to help you guys on that, but we want to be careful, is when you have a private foundation that you want to make sure that you're doing it correctly with qualified dollars to not run yourself into problems. Annual filing requirements, and these are just some of the different areas. One of the things that people ask a lot about is, man, you just talked for 20 minutes without taking a breath. Give me 3 things that I can take away from this meeting. So when we talk about a donor advised fund, what is a donor advised fund? So this is something that you guys will have as a follow-up to this meeting, and I'll go ahead and send that through Josh and team that you can read through it. It basically talks about how to set it up. How do you get the deduction? What's the ability from the charities over time? What's the administrative? How contributed funds belong and who owns the pieces? And then what type of assets can be contributed? That's an important conversation because you want to make sure that you're looking at that. Income tax consideration, it will be subject to the income tax law of the land. As it is currently, you have some different places that you could do, whether you decide to go through donor advised fund, private foundation. So the cost, the positive and negatives, talks about this is your deduction schedule that we had mentioned. So what cash, ordinary income, short-term capital, long-term capital, what that looks like. Of course, please seek the counsel of the CPA. One of the things that we are going to kind of wrap up the next couple minutes here is what are 3 things. Let me kill my screen share so I can see myself again. Make sure I'm not just talking into cyberspace. Oh, there I am. Oh, I still look like that guy. I've been here the whole time. Okay, so what are 3 ways that you guys can impact right now? So the first one that we would work through, which is kind of leading into the donor advised fund category, is how do you set up and create some sort of a mechanism by which people can contribute 2 types of assets. So invested assets, we'll talk about a 401k, and then we'll talk about an insurance asset and how can you do that. So the 401k conversation, bear with me one moment. I just need to bring up my notes on the 401k. Okay, so 401k, so retirement plans. So when we're talking about this, what we're going to be talking about basically are what are the basic rules. So just to kind of give everybody a quick refresh of what is a 401k. Somebody works at a job or an IRA, they put money into a 401k and they don't pay tax on it, unless it's a Roth, of course. Those assets grow tax deferred. And when you have those assets, when you distribute those, when you retire as a concept, you'll pay income tax on it. And unfortunately, the value of that cannot be included from the estate. And the challenge is it's hard to be donated in lifetime with limited exceptions. However, what you can do when you have a large 401k, as you guys are going after major donors or even smaller donors, is that you can actually look at the ability for them to donate part of that 401k. So the challenge with the 401k is that you could, if you have a large balance, be subject to almost like a double tax, right? So if there's an estate tax of 40%, an income tax of 40%, you could have a $2 million 401k, but the beneficiaries that would receive the funds after they go through that estate plan could be 700, less than half of it. And that's a pretty big pinch when you talk about somebody who wants to save money all their life and they feel like they want to give back. If they look at doing some stuff with a charitable organization, some of the things you could do is that if you do a charitable bequest of a 401k, the estate tax could be deductible and the income tax could be exempt. So in that scenario, if they had $2 million and they worked with you guys and they said, gosh, I want to bequest this 401k to the charity of my choice, well, that part of their estate plan could have an effective tax rate of 0. Now, of course, that's where you have to work through what the estate tax ramifications would be of that donor. But as you're talking to prospective donors and existing donors going, there's a big problem right now. A lot of people are worried about estate planning. Would love to talk to you a little bit about some of the things that we could do that might be able to help with that. And most folks that are going to be in that income and age bracket, they're probably going to understand that. The other way that you can do it is that you can also have them either gift cash that's in an insurance policy, or the death benefit itself. So the way that that would work is if you had, let's just have that $2 million 401k again, and they're worried about that growing to $5-6 million, that they want to benefit for the charity, but they don't want to shortchange the kids. How do they deal with that? Well, if they take an insurance policy, and then that insurance policy will replace the value of the 401k that's going to charity, the death benefit on that would be tax-free, and that would significantly reduce their overall exposure. English. So I have assets. I'm worried about having a large tax on assets. I can either gift the asset directly to, yes, I can with the documents, Josh. I can either donate a portion of my 401k, or I can take out an insurance policy. Either way, there's benefits to both, just depends on each individual's unique situation. The other side of it would be, how do we do that? So one of the questions that are out there would be, if you take the money and borrow, you could, the issue would be on a loan, the way that you would do that. So the question that we have that Josh put out there is borrowing from a 401k and disburse the money right then. Client get the tax benefit, and it would be taxable since a loan. They will still be paying interest on it. So one of the things that we talk about is, how do you arbitrage, whether it's 401k or an insurance policy? So this is kind of a neat little trick that people have. So let's say that we have $100,000 in an account, insurance account, investment account, retirement account. Each one of them are treated a little different. So let's just use as a concept $100,000. And they have this cash, and they don't want to get rid of this cash because they're like, I like holding on to this cash. However, they want to donate some of that, but they still want it in the market, or they still want it in their insurance policy. They still want to have it, but they still want to donate it. So what they can do is you can actually collateralize some of those assets, and they get a very low interest rate of prime. Now, it could be potentially deductible because they're giving it to a charity. And that what you do is they can take that money out at prime. And let's say we're getting 10% on the assets over here, and that we borrow it over here at, let's just say 4%. So the client or the prospective donor is still receiving 6% on their assets over here compounded, but they're giving you a piece of that money now at simple interest of 4%. That is called arbitrage. The reason that that is something that's very attractive is that they can still receive the return that they're wanting on the money, so they don't have to feel like, oh man, I'm not going to be able to earn that money, but they can still feel fulfilled because they're giving the money to charity. Now, if they leave it out into perpetuity, never pay it back, and then they die, oftentimes a charity will earn that money back, and it'll be solved. The other way you can do it is that when you have somebody who has an insurance policy that they'd like to take out. We recently had a client who sold a business and had a liquidity event. And this individual was like, gosh, I really want to give to my charity of choice. Well, what we did is the client took a donation, and they gave that money, let's say it was $6,000 a year, whatever the number is, and they donated that money to the charity. The charity then takes out the insurance policy for the benefit of the charity by the owner. The donor is giving to the charity. The charity is now purchasing a policy for the benefit of the charity. It is a way that a lot of folks can do that. And then, of course, we don't want to kill our clients, but upon the death, then the proceeds of that insurance company would almost serve as an endowment. So 3 things. 401k, well, my finger disappears here against the Jacksonville buildings. 401k, insurance policy to back it up, whether or not it's then given to the donor at the death, and then also that people can do a collateralized obligation to get an interest rate spread so that they still earn money on their money, but are still working with a charity. Okay, Kirsten, I talked for 32 minutes straight without taking a breath. I know we got some folks on here. Anybody have any questions? Any of that makes sense? My favorite color is blue. I'm a Scorpio, and I'm sorry about that. So I know we talked about a lot of stuff. Carol, I know they didn't tell you it was going to be a comedy show. Of course, it's going to be a comedy show. I'll get some sparklers here in a minute. What questions do people have about this stuff? I will send those documents that we covered, Josh, out for everybody so you can review them because I know it's a lot of data. Does anybody have any questions at this moment for me?
So
With that being, oh, yes, ma'am.
Yeah, so I came to Cause Inspired from a development team at a nonprofit, so I'm a little familiar with the fundraising space, and I'm curious if you have advice on how to breach that conversation with a donor of like
Sure. So
including your organization in their planned giving.
The dialogue itself, the technical stuff, the nice part about a charity is that you've got about every expert you can imagine generally on the board. I've served on them. You've got a financial advisor, CPA, a lawyer, you've got heads of state. Most of the time, mechanically, you have the wherewithal to do what it is that we're talking about. The challenge is really broaching the dialogue. And I think the best way that I've seen it with people doing these things is the word leverage. So when people do things, like I say, they do it out of selfishness and selflessness. So, and they want to do both. And so the conversation is when they're having these dialogues going, look, guys, obviously we're in some very unique financial times. And you've been a really great supporter of us. I understand that you are, maybe hesitant about, increasing donation, continued donation. I'd like to share with you some of the tactics, tools, and strategies on what we can do so that you can keep some of your money or make sure that you feel comfortable and confident in these economic times, but then also help us and help yourself at the same time through some of the new rules whether it's in the tax code or how we structure it. So just, appealing to both their need for selfless and selfish will allow them to feel that they're still able to do something, but they're not giving up those scarce resources because we're in these, very unique economic times. And then once they say, you know what, I'd like to hear more about that, great. At least it opens the door. And then most likely what would happen is that, then you'll have a little, pitch book, I guess, if you will. And then at least they're having the dialogue because people want to give. Right now, it's very difficult because they don't know how. And so there is, a very volatile economic condition that we're having, and things are evolving daily. Coronavirus or not, a lot of people go, oh my gosh, this is the end of the world. Well, in my career doing this since the late 90s, I've been in business. This is the 7th end of the world I've been through. And I think the 3rd zombie apocalypse. And so it doesn't change the fact that people want to give. Back in 2008, for example, when I was doing work with the JDRF, which is Juvenile Diabetes Research Foundation, my dad is a type 1 diabetic and a very good friend of mine passed from type 1 diabetes. We actually had a record year that year. And the reason was because it was actually a way that we approached it saying, you know what, let's do some of these tactics and strategies. Of course, buying the shoe, right? Very important. But people were, from a corporation standpoint, were utilizing some of these tools to help the charity at the same time be able to get some tax relief for their business. So it's just appeal to their need, understand that they are scared about just life in general, but then also help them understand that there are options that might be favorable to them based off of their individual circumstances. All right, we have a question in here. What do you recommend for nonprofits that are having these conversations with potential donors? I think that we have a few advisors recommend to speak to if they don't have one. Okay, yeah. So what I would recommend, so Sarah, where are we located in the United States? I don't know where Sarah, there's Sarah. Sarah, you look a lot like your name. So what I would recommend is, and I kind of started off with this, part of the neat part, I am in Jacksonville, Florida, but, oh, you are in Jacksonville. Well, yeah, I happen to know a guy that looks a lot like me named Steve. The neat part about these organizations that so part of the team, you see this cute little logo up here. And this is an organization that is still part of Northwestern Mutual's wealth management company. But we have offices all over the country. Prior to coronavirus, I actually would travel the country doing speaking engagements. Now a lot of the stuff is virtual and Zoom. But the neat part is that if you guys have somebody who's like, gosh, I'd like to know more about that, I will put my information up here. As a matter of fact, 1 second, please. I'll turn my screen share on, give you guys my contact info. And if I can't do it myself, I will be more than happy to recommend the advisor in the area that could do it. But I do a lot of this work around the country. So This is definitely something that is a thing that we do quite often. Let's see, going back to my share my screen. Okay, so that's me. Yay. And of course, Josh and team over at Cause Inspired will be happy, I'm sure, to share out the information. All right, do we have any other questions? I just removed my chat box. One sec, guys.
Yeah.
Open
Can okay?
Window back up.
Can you guys
no
hear
more?
me?
Okay. Hi, Josh. I can hear you.
Can you hear me okay? Yeah, so I would recommend too, when you're going to be reaching out to some of these large donors, that you have, one or two, maybe three concepts that really make a lot of sense for their particular financial situation. And then you have like maybe a very small presentation with real basic numbers, just showing you like, hey, you have $100,000 in your 401k. If you were to do X, Y, and Z, this is what that would look like. Is this something that would interest you? And you could only have a pitch with maybe one or two, maybe three at the most ideas. And of course, knowing your audience would be key. Just like we say in marketing all the time, know your audience and make sure you speak to them. And I would recommend the same here too as well. So, and of course, if it gets too deep, then you can, add people like Steve or other individuals in your area that are licensed in your state. But I think the simple way, I think to make it the simple as possible and just have a really basic breakdown and ask and say which of these types of giving appeals to you would be probably the best way to start that conversation too.
And Josh, what I can do is I can actually put something together for you guys that's general. Of course, it'll be Yay Northwestern branded, but I can put some of those concepts. It is a very difficult conversation. As I'm sitting here on my desk, I probably have 100 pages of notes. And in the time allowed, we're probably able to cover 10 or 15 of them at tops. What I can do is I can put something together for the charities that you guys are representing and that are serving others in the country. I could put something together that says, hey, here are 3 things that you can do that you could approach somebody with and go, you could do 1, 2, or 3, and this would be very helpful for our company, for our charity.
Steve, I don't want to commit you to anything, of course. So I'm not going to do that. But ideally,
I've known you long enough to.
What would be really cool is if you had one of those charts that breaks down where it's like, do you have a 401k? Yes, no. Yes, I do. Are you looking to liquidate it? No. Do you want to keep the money in the 401k? Yes. You should look at this type of fund. Do you have a simple IRA? Do you have a whole life insurance policy? Yes, I do. Are you looking to cash it in? No, I'm not. Do you want it to be available to someone for charitable giving upon your death? Yes, I do. Okay, you should look at this vehicle. Kind of like the little chart to do that. That'd be really awesome. I know there's probably too many potential ways to giving that might make that a little too complicated. But even if it was just 90% of people are going to have a life insurance policy, a 401k, and some kind of, or maybe some other IRA or vehicle, or maybe a piece of real estate. How would it look like when I want to give either upon death or I want to realize some tax benefit now and give? Like, how would that look? And so if there's like a little chart of like how to kind of guide people along that way, that'd be really cool.
We have one now that's general financial planning 101 type of stuff. We can amend that to be able to distribute for you with the focus being for charitable giving. That's no problem.
That'd be cool. But don't forget something like that. That'd be awesome. Thanks.
Okay. Any other questions, comments, complaints, concerns, arguments, statements of rebuttal, pontifications, and or epiphanies? If we do not, I think we are good. Guys, thank you so much for joining, allowing, and Josh and Kirsten, in all sincerity, thank you for allowing me to do this. Josh and I have worked for years together, knows charity stuff's a big deal for me. And actually, this wonderful, my pen disappears, behind this wonderful green screen is a whole bunch of work that I've done with charities and other organizations. Every time I do something, if I can't help impact the charity, I don't do it. The goal is, make a bunch of money and give it all away to other people. And I'm very intent on and serious about helping 1 million people. If I can help any of the guys that are on the screen and some of the charities that you guys find that you're in your heart of hearts, I'm happy to do it, and I'll be the first to volunteer.
Awesome. Thanks so much, Stephen. And I will send a follow-up email with your materials that you sent out, as well as your contact info to everyone who registered and everyone who joined. So thank you so much for your time. Thank you everyone for joining, and have a wonderful Thursday afternoon.
Yep. Thanks, Steve.
Bye, everybody.
See ya.